Okay, Assalamualaikum and selamat pagi, selamat sejahtera semua. I'm Puan Nur Aniza. So today we are going to look into the topic of preparation of cash flow projection and also on the preparation of the financial statement. Okay, that is actually under the financial part, okay, of your subject. Okay, BPK 20803. So here I have an example exercise. Okay, so actually it's taken from a previous year test question, but I've already uh, did some addition and also some correction to this question. Okay, so let's look. Okay, so without wasting much time, let's look at the question example. Okay, so Zikri Muaz started a business MZM Enterprise on January 2018 with a capital of 50,000 in cash. Okay, so the business sells prepacked dried sea products such as dried anchovies, prawns, and squids, which are sold direct to business and individual customers and also through online. Okay. So the mode of business is retail, okay, direct retail sale, and also through online. So listed below, okay, so here you can see some information that are in point form. Okay, transaction that have occurred, okay, from January to March 2018. Okay, so in the first transaction, okay, so this one, the bulleted information are actually information. Okay, so in early January, the business rented a premise, paying a deposit of 2,400 and RM 800 rent in advance for January. Okay. For the following months, monthly rent is to be paid in cash on the 27th of each month. Then 2 workers were recruited in January. The monthly salary per worker is RM 600 per month. One of the worker will only work for 2 months until February. Okay, in February, the business received a grant of RM 15,000 from SME Corp under the TUBE program. Okay, the fourth transaction, a second-hand truck used for business transportation was purchased for 30,000 in cash in March using a bank loan of RM 60,000 received in January. Installment repayment for the bank loan per month is 900 and will be paid at the end of each month starting from April. Okay, then the following information, depreciation for the van is RM 1,000 per month. Okay, so this will not be included in cash flow projection. Okay, so ini saya padam dulu lah. Okay, saya padam dulu lah. Kenapa saya cakap tu? Okay, then total credit sales for each month lah. January 18,000, February 20,000, and March 27,000. Credit sales are collected at the end of each month. However, 2,000 of credit sales in February was collected in March, and RM 6,000 in March have not been collected yet from customers. Okay. So purchases of raw materials were on credit in January and February. Okay, RM 8,000 for each month, but whilst in March, the purchase increases up to 3,000 more than the previous month. Settlement to the suppliers was paid in full the following month after purchase. Utilities expenses is RM 350 per month, but electricity bill of RM 120 for utilities use have not been paid yet in March. So these are the condition or transaction that you have to consider before you can prepare the cash flow projection and also the financial statement. Okay, so how do you tackle this question? Okay, so the question have already prepared. Okay, actually the question have already prepared the format for the cash flow. Okay, so what is required? Prepare the cash flow for the months of January to March. Okay, for MZM Enterprise as per the following format. Okay, so this is the format given. So usually you will be given the format, okay, in your test, okay. So you don't have to memorize the format, or only that sometimes, okay, the information here is not yet available, okay. So usually this is the format, okay. You will be given the cash inflows, okay, um and some spaces for you to input, okay, the information required, and then the cash outflow, and also spaces for you to include, okay, all the transaction that is relevant for the outflow, okay. So this is the format, okay. So what is required is for you to prepare the cash flow, okay. So I'm going to use another okay, another sheet here, okay. You can see there's another sheet here, okay, another document. So this is where we're going uh to prepare, okay, the cash flow, okay. So it's the same, I've already copied, okay, the format. So you are required to prepare the cash flow for the months of January, February to and March for MZM Enterprise, okay, as per the following format. So just copy the format, okay, and then let's start, okay. So let's start. So I'm going to uh delete first, okay, all the information here, okay. So how do you tackle this question? Okay, the first thing is to look at the transaction, and if you don't understand, highlight it first, okay. So what should be highlighted? So you have to look out for the inflows and also the outflows. So I'm going to highlight, okay, transaction that is related to the inflows with a yellow highlighter, and for the outflows I will use the green highlighter, okay, a green highlighter. Okay, so I'm going to use the highlighter now. Okay, so inflows will be yellow and outflows will be green. Okay, so look at the first statement. Zikri started a business MZ Enterprise in January. So this is relevant for January 2018. Okay, so January 2018. So with a capital of RM 50,000 in cash. So what does this mean? Okay, he started a business and he's bringing in cash. Okay, so when we talk about cash flow, we are only going to look at transaction that involves the movement of uh, cash inside and out of the into and out of the business. Okay, so a capital of 50,000 in cash brought in, okay, by the owner. So this is an inflow. Okay, so what is the inflow? So this is the capital. Okay, so 50,000. Okay, so when did it occur? January 2018. Okay, in cash, okay, so it's already in cash, so highlight, okay, so cash, okay. The business sells prepacked dried seafood such as dried anchovies, okay. So these are information, only information. So now you know this is the first transaction. So prepare in the cash, prepare here in the next document, okay, the cash inflows. So what, okay, so before that, this is the first month that the business started. So is there any opening balance beforehand? No, there is nothing. The business does not have anything, okay. So the opening balance will be zero, no cash, okay. So this is the first transaction, okay. The cash inflow that is received, okay, from uh the capital. Okay, so let me delete some rows first. Okay. So what is the first transaction? So it will be capital. Okay, so this is an inflow. Okay, so how much is the capital? Okay, so brought in by the owner, it is 50,000. Okay, the format lari-lari sikit. Okay, So that is the first transaction that you're going to put inside. Okay, so this inside the column. So this is for January. So put it under the January column. So this is what this is an inflow. Okay, happening at the start of January 2018. Okay, then look at the transaction. Okay, what is stated under the bulleted information. In early January, the business rented a premise. Okay, then what did it say? Paying a deposit of 2,400. So paying. So it means that the business is paying something. It's making a payment. Okay, so the payment, okay, is an outflow. So you have to use, so I'm going to use the green highlighter. Okay, so what is it for? Paying deposit 2,400. Okay, and RM 800 rand in advance for January. Okay, so here paying a deposit of 2014, when? Okay, in early January. So this is an outflow because payment is being made. Okay, so what is the payment being made? It is for a deposit and also a rent, okay, in advance for January. Then what does the information say? The following monthly rent is to be paid on cash on the 27th of each month. Okay, so for following month, so it means that next month, uh, rent will have to be paid regularly, but it will be due on the 27th and will be paid in cash. Okay, payment will be made on the 27th. Okay, so how do we record this transaction? So this is, okay, a payment being made out. So this is an outflow. So you have to move it, and here, okay, so you have to move it under cash outflow and type, okay, deposit. Okay, so this is a payment. Okay, so and paid in cash. So you have to record it deposit 2,400. Okay, and then there's also rent for January. Okay, so even though it is being paid early at the start of the month, okay, so this is still, okay, an expense. Okay, so being paid in cash. Okay, so the expense will only be utilized or will be incurred in okay, the expense will only be incurred at the end of the month, but you have already paid it upfront. Okay, so whatever cash that you have paid, you have to record it in the cash flow. Whether it is being used or not, it's an outflow that you have paid in that month. Okay, so the basis of cash flow and the basis, the preparation for cash flow and the basis for the preparation of financial statement is different. Okay, so for cash flow, we look at the existing inflows and outflows. Okay, then it said that for the following month, monthly rent is to be paid in cash on the 27th of each month. So you have to expect that. Okay, in following months, okay, there will be rent payment. Okay, so they record it in the column here. Also for the consecutive months after that. Okay. Okay, that's done. Now look at the second information. Okay, the bulleted information, second bulleted information. 2 workers were recruited in January. Okay, the monthly salary per worker is 600 per month. One of the worker will only work for 2 months until February. So you have to highlight this will be an outflow. Okay, so this is an outflow. Okay, so outflow for what? Okay, for salary. So 2 workers recruited in January. Okay, so it means that there will be 2 workers in January. Okay, the monthly salary is 600 per month. Okay, so they will be paid 600 per month. But okay, there's another condition here. one of the worker will only work for 2 months. Okay, so it means for you have here the cash flow is required to be reported for 3 months, but then the information here stated that one worker will only work for 2 months. It means that he will work up to February. Okay, so you have to be cautious about this statement. Okay, so it's stating that for 2 months, January and February, you will have to pay for two workers. Okay, and in the third month, in March, you will only have to pay for one worker. Okay, so it's still an outflow, but the numbers will change because of the condition. Okay, so before you can input the information, you need to calculate first what is the amount that you have to pay for two workers. Okay, in a month. Okay, so look at this document here. Okay, okay, so how to calculate? Okay, so first calculate the salary expense per month. Okay, so you have two workers. Okay, and the salary per month is 600. So it means that for two workers you have to pay 1,200 per month. Okay, but you have looking at the information given, it said that only for 2 months, January and February, you will have to pay 1,200. In March, there is only one worker, so one worker you will only have to pay 600. Okay, so that is the calculation. So show the calculation, yeah. Okay, so that you will not miss out any information. Okay, so now it's another outflow. This is for salary. Okay, salary. So first month is 1,000. January is 1,200. And for February, it's the same 1,200. But for March, only for one worker, it's 600. Okay, so settle. Okay. Then the following information. Okay, so this is in February. Okay. Business received a grant of 15,000 from SME Corp under the TUBE program. Okay, so receive something. So this is an inflow. So what did the business receive? They are receiving a grant. Okay, so from whom? From the government. Okay, so they are receiving money inside the business. So when did this happen? It happened in February. Okay, received a grant of 15,000. So this is an inflow. So I'm highlighting it as a yellow transaction. Okay, with the yellow color. Okay, so here I'm stating grant. Okay, tube. So when did this happen? So this happened in February. Okay, so this happened in February. How much is the amount of grant? Is 15,000. Okay, so that's settled. Okay. The fourth transaction, a second-hand truck used for business transportation was purchased for 30,000 in cash in March. Okay, so this happened in March using, okay, so what? How did the uh, truck purchase using what? Okay, using a bank loan of 60,000 received in January. Okay, so it means that the company has uh, secured a loan, okay, that was given to the company in January. Okay, so highlight this is an inflow because the company has a bank loan received in January. Okay, installment repayment for the bank loan per month is 900 and will be paid when? At the end of each month, starting from April. Okay, so is this relevant? No, it's not relevant because this is from April. So you only have to report for 3 months. Okay, January, February, March. So this is not related. Okay, so it's not related. Okay, but look at this. Okay, a second-hand truck used for business transportation was purchased. So it means that payment was being made. Okay, for this second-hand truck. So when did this happen? It happened in March. So when there's a payment, there is an outflow. So color with the green. Okay, the green highlighter. So business transportation. Okay, no. Okay, second-hand truck. Okay, so second-hand truck. This is used for business transportation. Purchase for 30,000 in when? Okay, so in March. Okay. So now you have to input here. Okay, the third information here is on the loan. Okay, so loan here, when was it received? It was received in January. So how much was the loan? 60,000. Okay, and then this amount was used, okay, to pay uh in the acquisition of a second-hand truck. Okay, so here it's trucks. Okay, and I said that was acquired in March. Okay. Okay. The information here, 900 installment. Okay. So because it started in April, so it's not relevant. Okay, so this is not relevant. So state here, not relevant. Okay. Okay. Then look at the following information. Depreciation for the van is RM 1,000 per month. Okay, so when you prepare the depreciation, when you prepare the cash flow, depreciation is not relevant. Okay, so it's not relevant. Why is depreciation not relevant? This is because it is not a transaction that involves real money or real cash going in or out, okay, of the company. Okay, so it's a non-cash item. So you do not need to report it in the cash flow. Okay, so not relevant, non-cash item, not reported. Okay, so it's not reported in cash flow. Okay, so remember that there will be no depreciation amount, okay, in cash flow. So it's a big no. Okay. Okay, now look at the following information. Total credit sales for each month are January 18,000, February 20,000, March 27,000. Okay, so these are credit sales. So when we say credit sales, it means that this sales have not been collected yet. Okay, the sales have occurred, but the customer have not paid yet when we call it a credit sales. Okay, so in January, the credit sales was 18,000, February 20,000, and March 27,000. So now look at the condition, okay, of the sales collection. Okay, so this is stated, okay, with the following information. Okay, so the condition for the credit sales is that credit sales are collected at the end of each month. So this is the sales, and it's based on credit. Customer will pay later, but usually it's going to be settled, okay, at the end of each month. So it means at the end of each month, customer will pay cash for the sales that they for the credit sales during that month. Okay. So the credit sales will be collected at the end of each month. So when there's a collection, this is okay and inflow. So we have to color it yellow. Okay. However, okay, so then there's another condition. However, 2,000 of credit sales in February was collected in March. Okay. So you have to be careful about this. It said that although the sales will be collected, okay, at the end of each month. Okay, usually it's going to be collected at the end of each month. However, in February, the whole credit sale will not be, the whole amount of the credit sale will not be collected, whereby 2,000, okay, from 20,000 here will be collected in March. Okay, so what is actually the cash sales, the amount of sales that will be received in March? So 20,000 will have to, you will have to deduct 2,000 from 20,000, okay, to get the amount that will be collected in March. Okay, and then in March, okay, RM 6,000 have not been collected yet. Okay, so from the amount that is expected to be collected in March, okay, 6,000 will be collected maybe in the next month or the following months. Okay, so look at the amount in March. So you should receive 27,000 actually, but then 6,000 is not collected. So the amount for sales of March is 21,000. But that is the amount of sales. But you have to remember, okay, here is it also stated that 2,000 from the previous sales in February will also be collected in March. So you need to prepare a calculation, okay, before you can input the information in the table, okay, in the cash flow statement. Okay, so how do you do it? So first, uh February. Okay, so look at February. January, it's nothing. Okay, February, okay, nothing have to be altered for the amount 18,000, but for February, okay, the amount is 20,000. You should actually collect 20,000, but then 2,000 will be paid later. So it means here 20,000 minus 2,000. So the amount to be collected, okay, the amount collected, okay, here is 18,000. Okay, so amount collected is 18,000. Okay. Then in March, the amount that should be, okay, yang belum lagi collect, okay, is 27,000. But then pada akhir bulan, okay, at the end of the month, only at the end of the month, 6,000 have not yet been collected. So it means that you have to deduct from 27,000 ni kena tolak 6,000 because 6,000 have not been collected. So first of all, you will have to deduct the 6,000 from 21,000. Okay, so this is actually the amount that you will collect for March. Okay, so the total amount that will be collected for March. But it also stated that the balance of February will also be collected in March. So another collection. Okay, this is actually for February sales. Okay, 2,000. Okay, so you have to add to the 21,000. So how much will be the amount collected in that month? Okay, amount collected. Okay, so for March and also for February outstanding sale. Okay, so this is the amount to be collected, 21,000 plus 2,000. So the amount to be collected will be, the amount collected will be 23,000. Okay, so you have to be careful, okay, with all these conditions. Okay, so now we can put this information in the column that is relevant. So this is an inflow. Okay, so it goes at the upper part of the state of the format. Okay, under the inflows. Okay, so this is sales collection. Okay, so it's a sales collection. This is for 18,000 fully collected in January. Then for February, it's also 18,000 because it was not collected in full. Okay, and also for March, collection was not collected in full, but there's an additional collection that that was not previous, that was not collected previously in February and was collected in March. So you have to add, so the amount will be 23,000 for March. Okay, so 27,000 minus 6,000, 21,000 will be 21,000, and then add 2,000, it will be 23,000. Okay, so for February, you will have to deduct 2,000. So the amount to be collected is 20,000, but 2,000 was not collected. So the amount that was actually collected is 18,000. Okay, so that is the total cash inflow. Okay, so that is the inflow. So these are usually the items that is included in inflows. Any investment received from outside the capital in terms of cash that is brought in by the owner. Okay, any grants received from agencies, okay, any loans received from um banks. Okay, so it's not the loan approved, it must be loan received. Okay, so loan approved, it means that your loan have been approved but you have not received any loans yet into the business. Okay, so it must be loan received. And then in terms of sales collection, it could be cash sales and it could be also credit sales collected. Okay, so it means that credit sales, before this, it was an accounts receivable. Okay, something that is due or owed to you. Okay, and the settlement is done at that month. Okay, so you will collect that credit sale in that month. So if the credit sale is not collected in that month and collected in the next month, then the inflows will be in the next month. Okay, so you have to be careful on that. Then we move on to the next information. Okay, so this is about purchases of raw material. Okay, so this is cost of goods sold. So what does it state? Okay, purchase of raw materials were on credit in January and February. Okay, were on credit. Okay, says that purchase of raw materials were on credit. So ini bermaksud pembelian raw material adalah secara hutang. Okay. So in January and February, the amount of purchase are 8,000 for each month. But once in March, the purchase increases up to 3,000 more than the previous month. So here, January and so in January and February, okay, the purchase projected 8,000 for each month, and in March it will increase 3,000 more. So it means that in March it will be 11,000 because 3,000 are added, okay, to the previous month's amount. Okay, so settlement to the suppliers was paid in full the following months after purchase. Okay, so this is the condition of payment. Okay, so you buy this month, you pay next month. Okay, so this is an outflow. Okay, so this is an outflow. Okay, so the purchase is done this month but on credit. Okay, and it will be settled next month. So you look at when it is settled. So it's going to be settled in the following months of the purchase. So here it's stated that January and February are 8,000. Okay, so it means that for January it will be settled. The payment will be settled uh in February, and for February the payment will be settled in March. Okay, and for March it will be settled in April. Okay, so here for March purchases, okay, although it's stated here, but it's not relevant for the preparation of the cash flow. Okay, so you're not going to look at this. So you do not need to calculate because this is straightforward. So here put under the truck, this is for purchase. Okay, so purchases raw material. Okay, so when did this happen? Okay, because you are actually settling. Okay, you punya hutang you. Okay, so bila? Okay, so for January, it will be in February. And for February, it's going to be in March. Okay, and in March, it's going to be settled in April. Okay, and the last transaction, utilities expenses is 350 per month, but electricity bill of 120 for utilities used have not yet been paid in March. Okay, so it means here every month there will be utility expenses of 300 per month. Okay, so this is the payment for utilities, 350 per month. But then another condition appears here. Okay, electricity bill of 120, okay, have been used but have not been paid yet in March. So it means here, okay, from the $350 per month paid, okay, 120 will not be paid in March. It will be paid later. Okay, so the amount in March for in terms of payment for the utilities expenses will be less. Okay, so you have to calculate how much is the amount that will be paid in March. Okay, so uh utilities for March. Okay, so this is usually 350 per month, but for March, okay, 120 will not be paid. Okay, so 350 minus 120 will be 130. Okay, the amount that is paid uh okay, in March, okay, is 130. Okay, so that is the amount paid. Okay, so now you can put the information in the relevant column. Okay, so now expenses. Okay, so utilities expenses. So this is recurring. Every month have to be paid. Okay, and the amount is actually a fixed amount. Okay, so there's 350 for February, January, and February. And for March, it's 130. Okay, so there's no other transaction. Now you are going to calculate for the inflows and the outflows. So what will be the amount of the inflows and what are the outflows? Okay. Okay, so we start with calculating the inflows first. Okay, so the cash inflows 50,000 plus 60,000 is 110,000. And then add with 18,000. So how much will you get it? Okay. So how much is the amount? Sekejap ya. Okay. 50,000 plus 60,000 plus 18,000. Okay, so 128,000. Okay, so 128,000. Then for February, 15,000 plus 18,000. So it's 33,000. Okay, and here is 23,000. Okay, so now calculate for the outflow. Okay, for each month. For January, okay, 2,400 plus 800 plus 1,200 plus 350. Okay, so the amount here is 4,750. Okay, and for February, it's 800. Okay, plus 1,200 plus 8,000 plus 350. So here is 10,000, 350. Okay. And for the last month, 800, okay, plus 600 plus 30,000 plus 8,000 plus 130. So this is 39,39350. Okay. So now calculate for the closing balance. So how do you calculate for the closing balance? Okay, so this is the formula down here. One down. So you have to use opening balance plus total cash inflow minus total cash outflow to get the closing balance. Okay. Okay, so here 0 plus 128,000, okay, minus 4750. Okay, so here it will be the closing balance will be 123,250. Okay, and for February you will have to take this amount here and carry it forward and put it as the opening balance. The closing balance of the previous month will be the opening balance for the next month. Okay, and now add 123,250 with 33,000. Okay, and minus 10,350. Okay, so the amount here will be 145,900. 145,900. Okay, so bring it forward to March. 145,900. Okay, then add, okay, 23,000. Okay, and minus 39,350. 39,350. Okay, so it's going to be 129,550. Okay, betul tak? Okay, tengok eh. 145,900 campur 23,000 tolak 39,350. Okay, 129,550. Okay, so the closing balance is 129,550. Okay, so that is how you prepare the cash flow projection. Okay, after this, we're going to look into how to prepare the income statement and also for the balance sheet. Okay, so we'll continue it with another video.